Hello, everyone. This is Brandon. Today is July 7th, 2024. It's Sunday, approximately 15 minutes until 5 p.m. Eastern Time. And today's topic we're going to be talking about this holiday shortened July 4th rally continued. And again, we talked about the holidays being in the middle of the week, causing a lot of skews in the market prices. And the question is, will this bullishness continue? And I talked about last week about the stock market crash probability growing, and we're going to be explaining whether this still remains intact, or are we just going into this pre-election market mania that's apparently starting to happen. So let's answer all those questions. But before we start, let's talk about our disclaimer. Pause it, read it. If you agree, please move forward. Now, again, shameless plug about our X.com Galaxydoc Market, and a lot of great commentary, midday commentary, as well as stuff from around the news, around the X.com and around the world that'll help you with your trading. And now, last week, we talked about this 4th of July is a banking holiday. And once again, we talked about it being in the middle of the week that last week. And so, of course, to add to that issue is that the July 3rd was a half day, and of course July 4th the market was closed, and we talked about this last week. And when you have these type of middle of the week banking holidays, and henceforth the stock market either closing early or being closed altogether, or both, in this case July 3rd and 4th was basically a holiday. This causes a lot of volume contraction, and algos go crazy, and generally markets tend to be fairly bullish, and boy, did they take advantage of it, right? And we talked about that there's going to be a slight bullish bias. It was more than slight. However, when you look at divergences and what our McClellan Summation Index and the breadth of the market is telling you, nothing really seems to have changed. And so we talked about last week also that S&P 500 and NASDAQ was losing momentum near the all-time high. That's still the same. Even though the momentum is waning, it doesn't mean that the stock prices can't grind higher, which has been the case. And then we had some bearish candle formation, and they erased all of that last week. Everything seems to look very, very bullish. And then we're going to be reviewing again our macroeconomic indicator. They really pushed that in a bullish fashion last week. But the question is that real, or is that a big bull trap that's coming? So divergences was playing out until this 4th of July. So really we need to pay particular attention to this coming week. And consequently, on Friday, on July 12th, kicks off with the second quarter earnings that is coming. And so that's going to cause a lot of volatility in the marketplace. And of course, there was news out that, everyone thinks that Powell's somehow going to cut rates. And we'll talk more about that, what that implies if that rate cut does actually occur. And we'll discuss that in detail. It's not what you think it will be. We'll do our sector analysis. We'll do our technical analysis of the S&P 500, but as well as many of the stocks that we're looking at. And of course, if you stay till the end, we'll talk about the summary and the watch list. Now, the Fear and Greed Index last week obviously has gotten a little bit more bullish. Considering that we're at all-time high, we're still in neutral. We came down from this fear level of 44, and so we're catching up to the current market euphoric rise, but it's still lagging. But again, this is a very low breath market conditions, and this, even though we had some laggards participating, moving this Fear and Greed Index into the neutral condition, I don't think not much has changed in terms of this market breadth being terrible since the 2008 Lehman Brothers collapse, and I think that still remains, and we'll talk more about that also going forward. Let's talk a little bit more in the news. Last time Bezos was seen selling 25 million shares of Amazon worth $4 billion. Now, I know this guy's very rich. Okay, and he just living the life, right? The last time he started selling this and held a party with Powell involved is in January 2020, right before, 1 week before the stock market crash happened. Even at that time, everything was going parabolic or moving higher. And we're in that similar situation. I'm not saying that this will do it, but there are things that are basically adding up that puts more and more into the camp that I've been talking about how the market is not what it seems right now. Now let's look at this is from Mac 10. Every investor assumes that the rate cuts, and this is what this holiday shortened rally was all about, is that they think that we're going to get a 25 basis point cut in this July Fed meeting. Here's the thing. I also been talking about a lot about the recession not being priced into the stock market, and if the Fed does cut the rates, that's going to change a lot of the dynamics, because cutting rates is going to be bullish for the treasuries, and so there's going to be possible rotation, and I agree wholeheartedly with this post, rotation out of the stocks back into the treasury bonds. And I talked about this in just passing, how once the market realizes, oh crap, they're cutting rates. Well, why are they cutting rates now? Be careful what you wish for, because the last time this happened realistically is when they panic cut rates. Okay, when they do this, it's right around the corner, recession comes around, and it's not very bullish for the stocks. Now here's the other one, is that job openings have been rapidly declining. Okay, and we saw those job numbers last week, and such sharp drops have occurred 3 times since 2000 dot-com bubble, financial crisis, and the pandemic. And so we got these type of job opening decline that happened. Okay, and we're probably in this phase, and then of course as this was happening, the markets were going euphoric. Okay, it's not at all what it seems. Just don't become the exit liquidity that I warn you about. Now, of course, then I had to chime in. Zero Hedge put out an article that last time this market was this lopsided, meaning divergences everywhere, and it just continues to grind higher. Lehman Brothers filed for bankruptcy, and I've been talking about this in all my posts and everything else. That all of these divergences that were forming, and all of these fear and greed index, we should be at extreme greed right now, but we're not, and all of these divergences that we're going to be talking about on our macroeconomic indicators are firmly showing that there is a market dislocation straight ahead. And we are now out of the bullish months out of the year, and we're heading into middle to end of July into August, which tends to be seasonally bearish even during election years. Okay, and I'm not going to talk about elections. You guys make your own mind up. I do fear for our country right now. All right, so let's go into sector analysis. Here's something that's very, very important for everybody to understand. Okay, SPY is bullish. I mean, it is breaking out, but the breadth is very, very negative. We'll talk about that. Also, consumer discretionary seems to be breaking out from being beaten up the most. The question is though, is it putting in a temporary top? Is it going to be coming down? The communication sector is super bullish. We talked about that last week. Here's the thing. Watch the technology sector, especially with the semiconductors, and we're going to be talking about this a little bit. Is there a sector rotation out of the techs and into, like I said, into these discretionaries or beaten down stocks into communications? But the industrials are weak. I mean, they're trying to recover off of the materials. Energy sector is super weak. Okay, so this is something that you might want to pay attention to, see if it breaks below this 50-day moving average. Okay, consumer staples always going to be strong during market dislocations, right? Real estate really chopped sideways. Financials, it is sort of bullish. I'm trying to get out of it, but they need to get above this 41.75. You know what I think about the banking sector? They are being propped up left and right, and the 10-year Treasury, I'll talk about that in a bit, is coming down, and the Fed needs to keep that TNX, or the 10-year Treasury, below the 42.50 for this rally, or to instill some confidence in the markets. And it's rigged at this point. All right, healthcare and utilities, okay, they haven't really participated much, but really there's some strength on SPY, which is on the back of a very few stocks that are going up into these rallies. Okay, and underneath it all, it's not what it seems. What's the issue here? The issue is that the breadth is waning, the momentum is waning, and everything else in between is faltering. So let me do this not the consumer, but the sector analysis real quick. So we have talked about the technology being at the top. However, when you dig deep inside, for example, this is something that I would pay attention to. Super micro. Dell is beginning to show some weakness on a very otherwise bullish day. And so, and of course, Apple, it's just being, the rally occurred as a result of Apple being bullish for that week. Okay. So we want to look at these computer hardware and see these ones that basically have been weak. Those are the ones that we want to focus on. SMCI has shown weakness when everything else seems to be bullish, right? And so this is kind of something that you want to look at, and I'm just showing you what we do in our sector analysis. When we look at the semis, though, and this is where I think caution is advised, I'm still looking at Nvidia for rolling over potential. Avagio, I know Nancy Pelosi bought a bunch of them. She's the greatest stock trader of 21st century. Insider trade much lately, folks? Micron. All of these we need to look for. They did pump up the market, so there's a lot of meat on the bones if this market is going to start rolling over. And why do I think that there's more and more signs that the probability of a sharp sell-off / crash is increasing is for these reasons. Previous market leaders are not participating. And then so the other ones that I want to look at is that Carvana reports in a couple of weeks. Okay, we need to look at this Carvana, okay, very, very carefully. Williams Sonoma is, after, bouncing off the bottom, is beginning to show that it's running out of some steam. Okay, GameStop, it's been weak. Been holding this 24.18. Of course, we're looking at DKS also. I think that there may be a possibility that DIX may be topping out a little bit or faltering. And so it's something that you want to look at, especially the ones that have been weak, especially ones that have good options on them. And so these are some things that we want to be taking a look at. Okay, it's very important that we look at these. Now let's go into our McClellan Summation Index. Despite the bullishness, again, this has been a very challenging situation, because as the market's going higher, McClellan Summation Index, because of the breadth that it follows, I've not seen this breadth this low and the market just grinding higher since, like I said, 2008. There's parallels to that very, very much at this point. The MACD really hasn't crossed over. It just flattened out, and we're beginning to see some MACD histogram showing some bearish divergences here. So be very, very careful out there. Now, put to call ratio, I mean, we are probably going down a little bit more in terms of people getting a little more bullish, and that's welcomed. And I think Monday and Tuesday is going to be a continuation, maybe a choppy sideways to continue grinding higher until we get some resolution into these situations by Wednesday and Thursday. I believe that's where we're headed. So keep an eye on that one. Now, one thing that I want to look at is also the VIX. Now, VIX is at the bottom end of the range right here, okay? And so whenever we get down into this area, I see this orange line, that trend line that I've developed, okay? That's a, I wish it was a little bit lower, but that is basically a candle that is finding support, and I believe sometime in the middle of next week we're going to start breaking out of this box and start heading towards these higher levels. And you know that the VIX can move very, very quickly, so we need to keep an eye on that. The other one that we're looking at is the Dow Industrials versus the transports. And the transport and industrials, they're both showing some bullish movements higher. I mean, obviously, it's we have a lot further to go, but the transports are trying to recover. We got to keep an eye on this. Notice the lack of the slope compared to the industrials versus the transports. Okay, they're still lagging. This is happening because a lot of the transports are beaten down, and people are picking them up right now. Question is that going to continue? We'll see. Now, let's look at our 10-year Treasury yield. I think Treasury yield, they're going to push this thing down, try to push it below this 4250. This is that green trend line. And let's see if they can push it further down. And that's going to be a little bullish. And I think that will continue. That's just going to put more meat on the bones. Okay. I also have some stocks that we've been following that looking for bullish moves. We're not at all bearish. We're just opportunistic. When we look at these. Okay, so let's look at our dollar. US dollar is headed lower also, folks. So they did a good job of basically manipulating the markets to create a bullish condition. The question is it going to get below this 20-day SMA and head into this 403 region? If it gets down here, yeah, then I'll give up my thesis that we were probably going to have one more bearish conditions heading into end of July into August. Okay, but that's what we're dealing with at this point. All right, so let's look at our SPX. And SPX is there's no sugarcoating it. This is pretty much going straight up. Pretty parabolic. Nothing bearish here. However, the RSI is showing some divergences. Still remains into this chart, and so we need to pay attention to that. The other thing is that we have this formation on the PPO ADX, and it may be beginning to peter out after we formed this bearish formation. It's beginning to maybe start to form another bearish formation coming in, so we need to pay attention to that as well. All right, so let's go into my Lulu. Okay, this is one that I'm bullish about because it is beaten down. It's been just grinding sideways in this channel right here. And I think that's where it's going to continue. But once it starts to move, I do believe that it's going to go much higher. It's going to have a rip your face off rally. We have CCI kind of showing some bullish divergences. We did have some bearish formation on the PPO ADX, and I think that's what was causing. It's doing one of these. It's causing that little pullback that's happening. But over the intermediate term, I do believe Lulu is headed higher, much higher. So why do I think that? Well, RSI has been bearish, right? We are breaking out of this downtrend line, and we just need this thing to move higher. We are in that buying zone. I didn't extend this out, and so let's see if we find some support here. We have MACD continuing to show bullish divergences. CCI is bullishly divergent, as well as stochastics. And guys, this is about as bullish as you're going to get, and we got some major pinching going on right here in this area. Okay, so that's what we're looking at. Just got to have some patience, maybe longer term data calls, and that's what we haven't given up on this Lulu on the bullish side. Now, what are we doing on the NVIDIA end when we compare to NVIDIA to the rest of the world? Because NVIDIA is the darling of the stock market. Guess what? NVIDIA is diverging while everybody else seems to be going bullish, right? Tesla, I told you, we need to watch Tesla, and Tesla broke out. Okay, and Tesla was telling us something, and that rally was coming. The question is it going to continue, or is it going to start to fall off ahead of earnings again? Okay, there's a lot of meat on this bone. When you look at the Dow Industrials and trannies, they're basically they're diverging off of these guys. So there's divergences galore right now as the top four stocks are basically being pumped I mean, very narrow breath, a lot of intervention from the Fed. There's a lot of manipulation in the 10-year Treasury and dollar. Okay, and I'm trying to help our. I'm not going to get into political side. Okay, so but you see what they're trying to do. Okay, as the market deteriorates and the risk for recession is growing, they are propping up the stock market, because in the end, I don't believe that the Fed is interested in controlling inflation. I think they're interested in is hyperinflating their debt out of this chaos. Okay, now let's look at something that I'm very bullish on, is Fortinet. And Fortinet is basically at the bottom end, and I do believe it is getting ready to break out. So we got this kind of inverse head and shoulders forming. We broke out of this downtrend line, and now we just need to get above this 200-day SMA. Okay, and once it gets there, we're going to 64, all the way up into the 70 region, all the way into this area. Okay, so requires patience. Slowly but surely, you need to be adding into these if you are into this. MACD is bullish. CCI is bullish. Stochastic is directional and bullish. And we have this PPO ADX that basically is telling you on the daily that it's ready to break out, and we are at the top end in terms of accumulation and distribution. It's about as bullish as you're going to get. As it was falling, they've been accumulating. And then we have our ATR. Remember, I use this very, very differently than many people realize. I use this as a directional indicator, and the momentum is about to change once it breaks higher. Okay, now, Netflix is, they're going to be reporting earnings in a couple of weeks. And, keep an eye on this one. It's not ready yet, but I do believe that if it starts to stall at these levels, we're going to have some significant shorting opportunity into Netflix, because to me, the subscription-based stocks are my next victims for consumer demand destruction. It was specialty retailers for a while, and then we'll talk about Carvana in that regard, and Spotify. Okay, so the other, like I said, we're talking about Carvana. Carvana has done a great job of basically recovering off of this fantastic inverse head and shoulders formation, and yeah, it's been going higher. It's following the trend line. It's finding support in these areas, and the higher it goes, the better it will be. I just do not believe that the used car market is going to have anything good, especially in this rising interest rate environment, and the default rates on these used cars are going through the roof. Okay, so this is the daily. It looks pretty bullish, except the divergences that are forming, right? And when you look at the PPO ADX, it's flattened out. It's probably I think it's doing this. You're seeing this kind of gyrating into these smaller bearish formations, right? If you look at this whole thing, I think it's going to basically end up doing this, okay, after the earnings. Okay, earnings are being reported in 2 weeks, so we got to pay attention to that. Let's look at the weekly. I'm not going to spend too much time on it. Little bear flag formation. RSI is negative. We've got MACD histogram diverging. Okay, we have CCI telling you that it's losing momentum on the weekly, on the longer term, and then very bearish PPO ADX formation. And then, of course, we're at the top end of the ATR. Once it starts breaking down, I think this bullish move is going to end, and I think it's going to be the earnings that's going to bring that about. Accumulation distribution, it hit bottom. It started to do some accumulation. Now it's kind of flattening out. Will it continue? We'll see. Okay, but I got my eyes on CVNA. And then, of course, NVIDIA. NVIDIA is, we talked about this at length. And I said after that 10-to-1 split, that it's going to sell off. Now, it's got a nice bear flag formation, descending triangle, if you think about it. RSI is negative. We have declining volume, and the insiders are selling like there is no tomorrow. Now the MACD histogram has flattened out a little bit on the daily, but we just need to keep an eye on this. I do believe that there is a bigger sell-off coming on NVIDIA. I know the accumulation distribution is at the top end of the range. It only could go down. ATR is at the top end of the range, beginning to diverge, which means that sell-off may be accelerating. It just hasn't even begun to do anything. The other one that I'm interested in, especially ahead of the earnings that is coming up in 2 weeks, is the divergence seen in Spotify. This is just kind of the stalling action that we see. It's been very bullish. It's been like Teflon for the bears. A little scary if you're looking to short this, but look at this PPO ADX. It's flattened out. It's just basically probably going to be flat ahead of the earnings, but I think it's going to do something like this. So it's some bearish formation. Right now it's inconclusive, but it's something that bears watching. Okay, so accumulation distribution is kind of weak, and then we're at the mid-range of the ATR, so I don't really have a huge directionality other than this topping formation. We're beginning to see this divergences, just a loss of momentum that we're seeing now. Spotify on weekly is a little bit more bearish. If you think about it, we have a rounded top forming. Here's the top end right here, which is basically selling. And then very, very weak RSI right here. Okay. And then, of course, the MACD is crossed over on the weekly. And so it is telling us that it's going to be coming down. PPO is negative. CCI is negative. Stochastic is diverging negatively. Accumulation distribution is basically diverging into the negative fashion. We're at the lower end. And if it starts to break out, guess what? The primary trend is about to change. This is why I like Spotify right now on a bearish side. So that's kind of all we're talking about right now. There are divergences galore, and again, some not seen since 2008 financial crisis. This rally that we've had and hitting all-time high just puts more meat on the bones, but it doesn't mean we're like blindly bearish. We're just looking for some bearish action that's about to come, and so the probability increases every day. But I would continue to watch Restoration Hardware, things like Lulu. I would look at Fortinet. I am super bullish on that one. Tesla has already broken out. I've been warning you about that potential for Tesla breaking out for a couple of weeks now, and it's already happened. I would not chase that into earnings that are coming up. Earnings season starting. So, keys to next week in summary: patience, patience, patience. And on cue, markets moved higher on the holidays, light volume. We anticipated that. It went a little bit higher and more aggressive than we thought, but most of the stocks did not participate. So, MSI signal is super bearish. Okay, there's no sugarcoating it, and I think there's MACD divergence in the bearish side forming right now. I continue to watch the specialty retailers for a potentially a bearish formation, especially subscription-based internet, things like Netflix, Spotify, anything that requires that kind of things. They have been super bullish, and there's a lot of meat on that bone. The weekly charts are showing you that there is a potential that they're topping, and what great way ahead of earnings to sell them off ahead of earnings. So there's continued bearishness in renewable energy, Netflix, Enphase, all of those. And I think that continues, just getting a little long in the tooth. So if you're still holding those, we're not. We've booked our profits on those, and we're just pointing those out. Now, if they bounced and stalled out, then we look into them again. I'd look into semis and computer hardware for potential tops and reversals. And so we're watching NVIDIA, Micron, ARM, Amazon. Okay, Amazon has Amazon Prime coming up on the 16th and 17th. And if you look at their history post Amazon Prime week, all right, after they release their results, okay, there's been a sequential decline, and we'll talk about that a little bit, probably in the midweek or maybe next week as a topic in itself. But there's a possibility Amazon can roll over, especially ahead of the earnings. Bearish on CVNA. First Solar is bearish, but they're getting long in the tooth. Enphase is getting long in the tooth. Be careful with those. SMCI, Apple is been propped up by the markets, right? This is how they're pushing the market higher with very, very small, few numbers of these mega cap stocks. Meta is bullish as all hell at this point, but it is nearing its top, and if it's going to fail, and if the market correction is going to come, I would look into those. Dix is another stock that has been super bullish, but it is part of the consumer demand destruction thesis, and I'd watch that very carefully. Markets are rallying right now in hopes of a July rate cut, but be careful what you wish for. I think the rate cut is going to be sell the news if it comes. I don't think the Fed can cut. Okay, they're doing it other asymmetrical ways by basically supporting the 10-year Treasury and the U.S. dollar. But remember, the other countries are also devaluing their currency also. Look for candidates for the bounce, rip your face off rally. I've been talking about this. This is from 2 weeks ago. Lulu, RH, and Tesla. Tesla already broke out. Okay, and patience on these, right? Lulu, I'm very, very big on, but it's going to require some patience. Bottom line, big, sharp, scary volatility is headed our way. Okay, yes, this is still on the table and likely will not happen during the holiday shortened week. I talked about that last week. I included this from that last week that we did this. Conditions are still critical. Bezos is selling, guys. All right. And historically, Bezos selling that amount usually is indicative of a market top. And I know it's super bullish when he does it. And then the market rolls over. So let's see if that continues. Patience is key and trade opportunistically. I am bullish on Fortinet. We have positions on these. Fortinet, Lulu, and Tesla. Okay. So, thank you so much for watching, and follow us at the x.com, Galaxydoc Market. This market is very, very interesting. All right, I think we're headed to something historical, and it's something that we need to keep an eye on. Okay, like us, share us, and above all, comment, good and bad. I know there's some thumbs down that you guys giving me because I'm saying some bearish things, but at the same time, guys, all right, you have to look at what the market is telling you, and you don't want to be an exit liquidity. I'm not saying go out and become short all over the place, but at the same time, you have to consider those possibilities and what the market is telling you. Okay, sometimes it is not what it seems. Okay, please subscribe, and if you want to learn about joining our group, we have a social media pricing. You need to email me to find out about that. Otherwise, let's get some alpha, and good luck next week. It's a tough market out there.